Hey everyone, this is Jay, also known as jaynemesis on eToro. I am a popular investor there. Head over to the website if you want to check it out. This is week 15 of our eToro update series for 2018. Let's dive in and take a look at how we performed this week. This week, I closed a total of 34 trades for a realized profit of 0.45%. Top news this week, Binance token burn. Binance have burned 2.2 million tokens out of the 114 million or so circulating supply. This is equivalent to $30 million. It's slightly lower than it was for the previous quarter, which was around $40 million worth, but that's expected given the different price variations on cryptocurrencies and slightly lower trading volume. Overall, pretty big news for the space. You can imagine that potentially, if cryptocurrency continues to grow and the exchange continues to do well, that Binance could well be hitting a $1 billion total profit for this year, which is insane. On to Zuckerberg's US Senate hearing. So Zuckerberg has been in hearings for several days over in the US, and he has been answering questions from the US senators, some of which were pretty easy and honestly quite easily defendable. A lot of it was like trying to teach old people how the internet works. But in reality, there were also some very hard-hitting questions that were really drilling down to the point of, why are you collecting as much data as you do? Why didn't you take more precautions? And also a lot of questions around regulation and where that should go moving forward, which Zuckerberg probably quite wisely decided to avoid answering. The problem I have with this is that I think it was incredibly obvious. I watched it and it was so clear when he wasn't giving answers to questions. My team will catch up with your team was a phrase that he said probably over 100 times during the hearings. There's some other news surrounding Facebook as well, but overall I'm still feeling a little bit bearish about Facebook at the moment, at least for the next couple of quarters. We'll see how their earnings report comes out. On to Elon Musk's tweet about profitability. So The Economist wrote an article explaining how they believe that Tesla, well, to be fair, it was a bank, believed that Tesla could be asking for more money this year, up to $3 billion. And Elon replied on Twitter suggesting that not only will Tesla be profitable by Q3, but they will also be cash flow positive. So this is a pretty important tweet. We know that Elon's got a bit of a reputation for over-promising and under-delivering, but we'll see how this pans out. Potentially it could see a little boost for Tesla. Personally, I'm probably going to wait for the earnings report before I think about putting any more money in. Tesla, of course, have still been struggling with production. They're only currently making just under 2,500 Model 3s a week, and their target was 5,000. And our final piece of news for this week, Japan's Financial Services Authority released a bunch of crypto data. This data was actually really quite exciting for me, and probably the most exciting thing in the news, I think, this week. 3.5 million traders in Japan alone. So that accounts to somewhere in the region of 2.8% of the Japanese population are actively trading cryptocurrencies on exchanges over there. And of course, those are only the ones that are using exchanges that this data is collected from, which is a total of 17 different exchanges. Last year, trading volume in Japan totaled $93 billion as well. So it's really pretty cool to think that, 3 out of every 100 people in Japan are trading cryptocurrencies, not know about cryptocurrencies, not that are thinking about trading cryptocurrencies, but actually trading it on real crypto exchanges as well. So this is pretty interesting stuff. We've also seen a lot of news surrounding Yahoo and some of the other big exchanges over in Japan recently. So it seems like a real boom market over there. And I think this can only really be seen as good news for cryptocurrency. Japan really leading the way at the moment, I would say. On to our crypto recap. Bitcoin served me pretty well this week. A total of 5 trades, one of which was a loss trade, but my only loss for the week, so I'm not really too concerned about it. 4 trades that were profitable, so overall I'm pretty happy. They were pretty small trades, between 1 and 6% or so profit, but they have been consistent, and of course a couple of those were shorts, which proves that I'm able to make some money when the market is a little bit more indecisive and a little bit more volatile. Dash has started a new advertising campaign on YouTube. And of course, evolution is coming up. So I will be looking to slightly increase my positions in Dash in preparation for that before the masses of people switch over to it. Currently, they're all busy with EOS because of the airdrops that are taking place, and probably even with Verge as well. But I think now is probably a decent time to be slightly ramping up my positions in Dash in preparation for Evolution's release, which of course is in a few months' time. I did do a couple of trades on Dash. I think there were 3, and I think they were all profitable. So, can't complain too much. Nothing to scream and shout about. Most of the trades this week have been pretty small, but they have been consistent, and we did make profit this week. So you can't really turn your nose up at that, I don't think. Ethereum again, I'm still concerned about their long-term future competing against EOS, and I think that although I'm still happily trading it at the moment, and although I've already reduced my exposure a reasonable amount, I'm still very concerned about how they're going to compete in a world where EOS has released their code at last, which of course is only a few months away now. So I am planning to reduce exposure slowly here. Probably this is what I'll end up moving into Dash over time. But I do expect that it will recover back to the prices that we were previously at. So if you're someone that has some Ethereum positions that were bought towards the all-time high, I wouldn't concern yourself too much unless you're 100% invested in it, in which case you shouldn't have been, I guess. Hindsight, hey? And finally, Stellar. So Stellar's something that I just wanted to touch on here. Again, I've done some nice trades on that, and Stellar's a bit more profitable to trade when you get it right as well, because it's a lot more volatile, same as Ripple. But I wanted to touch on it because I feel like there's been a slight shift in thinking recently in the blockchain space, and cryptocurrencies such as Stellar and NEM, which have good functionality but not amazing functionality for building tokens and running them on top of their network, I think have started to gain a little bit more attention recently. And I think this is primarily due to some of the scaling concerns that have been surrounding Ethereum, the delays with the release of Casper and the proof of stake stuff, which is obviously part of Casper, and even their version of Lightning Network, which is known as Raiden. So I think there's been a little bit of a shift towards Stellar because it can perform better than Ethereum at the moment. I'm interested to see if this really takes off, but I think that they've got a good advantage in trying to build some relationships for some good currencies to be floated on top of Stellar's market effectively. So let's take a look at this week's stock trading. Snapchat, again, has been a really strong week for me. 5 trades in total, all profitable. Nothing crazy again, we're talking 2-3% trades here and there, maybe holding for 1 to 2 days at a time. But again, this is something that I'm pretty content with. I still believe that Snapchat is overvalued. I still think they're going to struggle. I'm probably going to avoid holding Snapchat over the earnings period because I do think that looking back at its history, it does have this extreme volatility. And although we could win big if it did decide to drop quite a long way, I think there's a reasonable chance, given what's going on with Facebook and some of the other competitors in the space, that they could actually see a slight uptick. So I'm going to make sure that I get out before then. Maybe a week or so ahead of time. I'll kind of see how it's looking on the charts, and then get back into it again afterwards. Facebook, 10% of Americans, according to a survey which I did post on eToro. So if you want to go and take a look, head over there. Are currently deleting their Facebook accounts, and actually 17% of Americans, according to that survey, which, by the way, was a very small sample size. So please don't take it with too much. I guess don't give it too much credit. 17% of Americans have deleted the Facebook app off their mobile device as well. So these are interesting times for Facebook, I think. As I mentioned earlier in the news segment, I'm really not very bullish on them. Currently, my shorts on Facebook are really quite heavily drawn down. I have one which is on 2 times leverage, and that is suffering quite a lot. It's down at minus 21% at the moment, at the time of recording this video. But I'm determined to hold on to these until after earnings. And if I get it wrong and Facebook goes up by 10% on earnings, then I will end up having to close out at a substantial loss. But these are only a handful of positions, and I'm okay with that risk. I think that it's worth it. I think the market broadly has got it pretty wrong on Facebook this time, and the effects of this are much more devastating, to be honest, than most investors can see at the moment. I've been saying for a long time that I felt that Facebook users were going to be starting to leave the platform. And granted, many of them will move over to Instagram, so they're still in the Facebook ecosystem. I still think that Facebook is something to be pretty cautious on at the moment. And to be fair, I was right about their last earnings report when I suggested that they would see their first drop in users. And that's why I got out of Facebook before then. So we'll see what happens. There's only a couple of weeks now until that happens, so we'll hold out until then. If some of my positions become profitable before then I may close them out just to kind of protect ourselves a little bit from the earnings report, especially if it drops lower than where it is now, because it's more likely to go up, I guess, the lower it goes. Square. Square's an interesting company, actually, and I've been trading them on and off little bits here and there, but like Sony, actually, both of these are kind of similar in my head at the moment. I've been doing a bit more research into them recently, and I feel a lot more confident in their long-term prospects, and as a result, I'm happier to start trading them more actively. So I'm going to be watching the charts a bit more closely and performing a bit more TA and actually trying to actively trade both of these stocks. Finally, AMD has found its bottom. Possibly. I'm not trying to suggest that I know that for sure, but it definitely seems like AMD should not be at any point in time under $9.50. So this is good news. I think there's a huge amount of upside potential for AMD when compared to other stocks in the market. It seems like they were one of the worst hit from the recent dip in the markets, and of course they did have several other factors that came into play here as well. The earnings report is coming up. I am interested to see especially how they do regarding Epic in this earnings report, and I think that is really the linchpin that could either send it flying or potentially send it back down to that low again. But I'm pretty confident on the risk-reward ratio here as we head into earnings season. Of course, AMD could well change in price quite dramatically between now and then, but we'll keep an eye on it. I don't want to increase my exposure. I'm already very exposed to AMD, but hopefully this earnings report goes well and we can actually start to reduce our exposure a little bit. So let's take a look at our realized trading statistics for this week. 34 trades closed, as mentioned previously, 33 of which were profitable and 1 of which was unprofitable. Our average trade size was 0.73% according to the stats we have here, although I may actually look to remove this from future reports because me and Jesse realized that we have actually been giving this average trade size based on an incorrect figure, basically, that we get from the report. It's not that the figure is incorrect, it's just that we don't have access to the other figure easily. So that's what we've been basing it off. And when we are roughly like balanced on our portfolio and we're not heavily drawn down, it works out pretty well. But at the moment, because we're drawn down, the average trade size that it says here is actually totally wrong. So in reality, I am at over 1% on my average trade size. So don't worry about it. It's not really too important. But for those of you that are maybe wondering and saying, oh, why aren't you doing bigger trades? That's why. I am. It's just that this stat is wrong. Our average trade profit was plus 1.82%, and our average trade loss was minus 3.19%, which again, that's only one trade, so don't draw conclusions too much from that. Most traded was Bitcoin and Snapchat with 5 trades each, and our total profit was 0.45%. So where does this leave us? Well, it leaves us in a profit currently for April. I'm reasonably happy with this, and I did say in the previous video that I think that we've reached a bottom on cryptocurrencies and that it should start rallying within the next 1 to 2 weeks. I guess it was at the start of that period. I would have really liked to have seen a slightly longer consolidation period, but we saw what was actually one of the most insane 1-hour trading periods in Bitcoin's history that started this rally, and I think we've seen the bottom now. I think we have officially, I'm calling it, we've seen the bottom. So let's take a look at our performance and where that leaves us. As we've moved into April, we're looking pretty strong actually, plus 6.88% currently. Of course, this does include our draw up / draw down. I mean, we're still drawn down heavily on our portfolio overall, which should hopefully kind of give you an idea of where we could potentially end up in a couple of months' time if the crypto markets and the stock markets both recover, which I think is reasonably probable. Certainly, I think the cryptocurrency markets will recover over the next year. So yeah, overall, I'm pretty happy with this actually. Some good profit this week. Last week was again, I think some good profit that was kind of hidden by the fact that I was closing a few losing trades. But as we head through this month, I'm quietly confident that we will see our first green month of the year, which, trust me, is a huge relief for me and a huge relief for all of you guys, obviously. And I think hopefully we can move forward and start to make some good profit. As mentioned, of course, that figure is very different to the figures that you've seen in my realized trading statistics. So take it with a pinch of salt. There is every chance that if cryptocurrencies go back down to the bottom again, that we will have lost a reasonable chunk of money and we'll be back down to maybe 0.5% profit for April. This is possible. It's unlikely, but it's possible. So please keep that in mind. But I will continue to try and improve my performance and take some profits when we need to. I wanted to quickly take a bit of time to go over some of my strategy for those of you that perhaps missed it in previous videos and previous posts. So at the moment, I am taking a slightly more cautious approach to my trading. We will be trying to reduce our exposure in some of the stocks that I think will potentially perform worst during a correction, because I think a correction is possible. And reasonably possible, like maybe 5%, 10% chance at the moment. So as a result of that, I am looking to reduce my exposure slightly to some of the stocks that are more dangerous. I'm also increasing my hedges, which is why you've seen a lot more gold and silver trades recently. And of course, I still have shorts open on the major indices. I'm also slightly changing my strategy. You've probably already noticed it in how many trades I'm closing and the type of trades that I'm closing, where there are a lot of trades which do not last a particularly long amount of time, a lot more day trading effectively. Just trying to capitalize on some of the daily volatility without leaving us exposed to the underlying asset for too long. Finally, of course, we have earnings season coming up. I said that I would let you know more specifically about some of the earnings that I'm looking forward to, but I haven't written that on here. I did mention AMD, I guess, but yes, I will be making posts about that as they come closer. Finally, there is a quarterly report that myself and Jesse have been working on to give you guys some real insight into the stats and the numbers and how I've performed during the first quarter of this year, which was, of course, my worst quarter ever, I think. So just trying to provide some extra transparency and really explain the numbers, where it went right, where it went wrong. And of course, we'll be providing all of the data that we base our analysis off to you guys to use and manipulate and come up with your own statistics. Maybe you can point something out to me that I've not noticed before and question me on it. I'm more than happy for that. So yeah, that should be coming this week, although it was delayed. So it was meant to be last week. I think I mentioned it in last week's video, but it should be coming this week. So stay tuned and I will let you guys know when that's ready. That sums it up for this week, guys. Thanks for watching again, and I will see you all next week.